Hi there, Jason Moser, analyst with Motley Fool One. Thanks again for joining us for another edition of Ask a Fool. Today we're taking a question from Justin Pierce, and Justin asks, when you make a recommendation on one of your share services, why don't you include a stop loss recommendation? And I think that's a great question, Justin. You know, I think the answer gets to the heart of foolish investing, and let me explain a little bit further. First and foremost, let's define what a stop loss order is. And this is an order you give to your broker to sell a given stock when or if it reaches a given price, usually on the low side. But the point of a stop loss order is to limit one's losses on any given security. So you may tell your broker to sell shares of XYZ if they fall to $25 per share or lower. Basically, at the end of the day, it just limits your losses. The problem is, especially today, with the volume of trading and high-frequency trading and the free flow of information that's out there, volatility certainly comes more into play now than probably ever before. And a given stock can drop really fast on just a rumor, never mind anything that may actually hold any merit. Now, because our recommendations are based on longer timelines and the fundamentals of the business, looking at things from the ground up, the competitive advantages, management, things like that, we tend not to worry about this short-term volatility because we believe that over the long run, our investments will do well. But we're planning to give them the time to play out. We would hate for a stop-loss order to take away from ours or our members' potential future gains, and then furthermore to lock us into a loss based on some short-term volatility and noise out there that ultimately means nothing in regard to the long-term investment thesis. So, you know, we're not traders, we're investors, and we look at things with a longer time frame, a longer time horizon, with a diverse portfolio of holdings. So we're looking at this over the course of years, and so when we look at it from that perspective, stop-loss orders just aren't a tool that we choose to use. That doesn't mean that we're right or wrong, that's just how we see it. But I'm glad you asked the question, and I hope I answered it well for you. And for more information, make sure to check out Fool.com.